Hello friends, welcome to my channel. Today I brought to you another interesting video on the latest IPO Equitas Small Finance Bank. Before we begin, if you have not subscribed to my channel, please do subscribe and consider joining the channel community and do follow me on Telegram. I am Varun Agarwal and let's get started. So Equitas Small Finance Bank originally was incorporated as VAP Finance Private Limited in Chennai in 1993. In 2011, the name got changed to Equitas Finance Private Limited. So still it was a private limited company in 2011. In 2015, it got converted into a public limited company. In 2016, it got the final approval from RBI to start a small finance bank. And then the name was changed to Equitas Small Finance Bank Limited. The holding company of this company is Equitas Holdings Limited, which holds about 95.49% shares. Equitas Small Finance Bank is the largest SFB in India in terms of the banking outlets, and it is the second largest in terms of AUM, asset under management, and the total deposits. So this is a brief introduction. Now, when we are talking about SFB in this video frequently, let us understand what is a SFB. SFB is a niche bank. That means it is specifically formed for a purpose, or the government wants the SFBs to focus on the small borrowings. So SFB is a niche bank which is having an SFB license, small finance bank license given by RBI, and it focuses on sections of the borrowers or sections of the society which are not served by the bigger banks, such as small business units, farmers, small businessmen, small industries, and small vehicle loans. These kind of segments are focused by the SFBs, which are not much given importance by the bigger banks. So SFB should be a public limited company under the Companies Act 1956, which is changed to 2013 now. RBI regulations regulate the SFBs on broad basis. We'll discuss what are the RBI regulations, only the important ones. SFBs also have to maintain the CRR, the cash reserve ratio, and statutory liquidity ratio as other commercial banks. So they have to maintain the same ratios which applies to other banks. 75% of the ANBC, which is adjusted net bank credit, this has to be given to eligible sectors as per the priority lending as per specified by the RBI. So this means that RBI specifies some priority lending sectors like agricultural sector and other sectors. Out of the total loans, 75% have to be given to those sectors. This is specifically mandated by the RBI for SFBs. Then 50% minimum of the loans have to be of a size of less than 25 lakhs. So this is again a restriction, which means they have to give it more than 50% have to be small loans which are less than rupees 25 lakhs per borrower. Then the promoter shareholding should be brought down to 26% from the day they commence operations within 12 years. That is why Equitas Holdings Limited is bringing this IPO, which serves dual purpose. One purpose is they have to get publicly listed, which is also mandatory, which we'll discuss again. Second purpose is their stake has to be reduced to 26% in the next 12 years from the date when they commenced operations. So another condition is they have to get mandatorily listed on the stock exchange within 3 years from where their the net worth of this company reaches 500 crores. So all these conditions have to be followed by a small finance bank. Another condition is 25% of the branches minimum have to be in rural unbanked areas. So again, there is a focus on those regions, geographically those regions which are not served by the bigger banks. So here you can see the entire motive in all these kind of conditions by the RBI is to make these banks reach regional areas which are not served by the bigger banks, people who are not given importance by the bigger banks, small businessmen which are not being catered to by the bigger banks. So the entire focus is on small and micro finance. Now let's discuss about Equitas Holdings Limited, which is the promoter of this company. Equitas Holdings is an investment company registered with the RBI. So this company doesn't do any specific business. They are only into investment. It has two subsidiaries. It has investment in two subsidiaries, Equitas Small Finance Bank and Equitas Technologies Private Limited. So these are the two subsidiaries of Equitas Holdings Limited. This company doesn't have identifiable promoters and it's a professionally managed company. So the purpose of this company, Equitas Holdings Limited, we are talking about, is to invest in subsidiaries and to give them funds in terms of borrowings. That is the whole purpose. So this company is the promoter of Equitas Small Finance Bank. Now, who is running the Equitas Small Finance Bank? Managing Mr. Vasudevan PN, who is the managing director and CEO, manages the bank, and he holds a company secretary degree. He has extensive experience in this industry, and specifically if we discuss, he has worked for more than 20 years in the Murugrappa Group in the same financial services sector, and earlier he was a managing director of Equitas Holdings Limited. So you can understand by this that the leadership of this company is in very good, efficient and safe hands. Now let's discuss the types of loans which this bank gives. Microfinance loans, as we all know, vehicle loans, mortgage loans, MSME, these are small, medium-sized businesses, corporate loans, gold loans and other miscellaneous loans. So these are the different types of loans which are given by Small Finance Bank. Now let's discuss the industry in which this bank operates. Although this is in banking, but this is a niche industry different from the general banking, as their focus is onto small sector lending. So the government's focus is on this industry, to grow this industry so that every region in India is catered to and every small individual in India gets the benefits of which a bigger businessman gets. So the government's focus is on this industry. This industry is growing at more than 25% CAGR, which is a very rapid pace of growth. The top three players in this industry are Equitas, Ujjivan Small Finance Bank and AU Small Finance Bank. Out of these three banks together cater to almost 64% of the market share. There are a lot of opportunities still, and there are a lot of areas in India which are not catered to, which brings a lot of scope, untapped market in this industry. And the unorganized people who lend money to people, those kind of money lenders will get eradicated over a period of time, and people will shift to small finance bank for their financing, which is a positive sign for this industry. The deposits in this industry average are expected to grow at the rate of 60% CAGR up to financial year 22. So industry as a whole, if you see, the industry is growing at a very rapid pace. Now what is the advantage with this bank? What is the competitive advantage or moat which this bank has compared to its competitors? This bank, although its focus is on microfinance, still it has diversified itself into different types of loans, and this diversification gives it a lot of safety and advantage. They are not much dependent on the microfinance business, although their legal requirement is to do that, which they are complying. The deposits are fast growing year on year. If you see last year compared to, they have grown 145% deposits, and the number of outlets are 991, which is the largest number of outlets by any SFB in India. The second highest is this is the second highest bank in terms of CASA ratio in the industry. CASA ratio is a current account saving account ratio, which gives the banks a lot of advantage in terms of lower cost of money which they receive. If they have current accounts more than the saving accounts, then the banks get without paying any interest to the people who are depositing money, they get money which they can lend at higher interest rates. So CASA ratio, the higher the CASA ratio is better for the banks, and this bank has the second highest CASA ratio in the SFB industry. And in terms of market leadership, as we have discussed, it is one of the top three banks which accounts for a large market share in this industry. Who are the other competitors of this bank? AU Small Finance Bank, Ujjivan Small Finance Bank, Jana Small Finance Bank, Utkarsh, ESAF, FinCare and Capital Small Finance Bank. So these are the major competitors of this bank. What are the growth prospects? How would this bank we can expect this to grow in the near future? The market size is huge, so this bank will have a lot of scope of growth in terms of the market. The cost of borrowing for this bank will be less, which will give it good margin in terms of profit. The bank is launching lot of customized products in different forms of loans, as we have discussed. It is not restricting itself to only microfinance. So that is why it is growing horizontally, and it is continuously focusing on microfinance and increasing the number of outlets, penetrating more and more in rural areas, and that is why it is growing vertically also. The CAGR of this particular bank also, if you see in terms of growth and revenue, is very high, and it is tapping the opportunity to cross sell different products to the same customers also. As we have discussed, the informal money lenders will slowly get eradicated, so these kind of banks will get advantage in terms of growth. And other than the microfinance, there are different products slowly they are focusing on, and they are catering to similar to the other bigger banks in the industry. What could be the different risks which this bank may face, which is important as we are discussing an IPO, and this company has not been into the market from quite some time, so we have to understand the risks in detail. This particular SFBs have to face or comply with a lot of regulations, and if there is any violation, they will be heavily penalized. So that could be a risk. Volatility in the interest rates will affect their margins a lot since they are banks. Continuously, they will require a lot of funds because their entire business is dependent on money lending. 54.31% of their customers are focused in only one state, which is Tamil Nadu. So if there's any problem in that state, this may get affected badly. Top 20 depositors of this bank contribute for 32% of their deposits, which is again risk. Microfinance loans and unsecured business loans are collateral free. So there's no security, and if at all there is a default, they cannot get their money back in these two types of loans in this industry. The NPAs are rising due to the COVID impact and other instances that could be a risk to this bank, and competition from others in the same industry and also the bigger banks could be a risk to this bank. Now let's discuss the financials. The share capital is consistently maintained with a slight increase in financial year 20 to 1053 crores. Reserves and surplus, if you see, is continuously rising, which is a good sign in the last 3 years, and it has gone up to 1690 crores. Advances are also steadily rising and they have reached 13,747 crores, which is again a very good fundamental growth. Net asset value per share is continuously increasing, and it has gone up to 25.92 rupees in financial year 2020. The total income is on a steady increase in the last 3 years, and it has reached 2,927 crores in financial year 2020. The net profit financial year 2018 was a bit less, but it has jumped to 210 crores in 19, and it has continuously increased to 243 crores in financial year 2020. EPS, if we see, is again on a rise to 2.39 rupees in financial year 2020. Now let us see some ratios. The CASA ratio is 29.23 in financial year 19, and it has gone down to 20.47 in financial year 20, which is not a good sign, but still 20.47 it is a good CASA ratio to be maintained. Net interest margin has fallen a bit in financial year 2019, but it has gone up to 9.11% in financial year 20, which is a good margin. Gross NPA ratio is 2.68 in financial year 2018 and gone up to 2.72%, which is not good, as the NPA ratio should be minimal and the net NPA should be tried to be kept below 1% ideally. And net NPA and gross NPA both, if you see, have gone up in financial year 2020 when compared to earlier, which is not a good sign. Now let's discuss the IPO details. This IPO opens on October 20th and closes on 22nd. The IPO size is about 517 crores if we calculate it at the cutoff rate. The fresh issue is about 280 crores out of the 517 crores. Price band is 32 to 33 rupees. Lot size is 450 shares. One lot, if you buy, comes to about 14,850 rupees. Maximum you can take 13 lot, which comes to about 1,93,050 in a single application. Face value is rupees 10, PE comes to about 13-14 multiples, and allotment would be done on about October 27th and trading will commence on November 2nd. So in terms of valuation, 13 PE is kind of reasonable. Coming to the objects of the IPO, the object of the IPO is to raise this money for the growth of the bank to increase the bank's tier 1 capital base, and the capital adequacy ratio after the IPO will go up to 22% from 21% presently. So the overall conclusion would be that the company has fundamentals are quite average or above average, I could say, but they are not so impressive. Growth wise, it has been doing well in the last 3 years. It has given a very good growth. The management is experienced, which is a good sign, and the bank is one of the leaders in the industry, which is again good. In terms of products, it is well diversified, so it is good. But if we have discussed some risks earlier that have to be kept in mind. Industry is fast growing, which will support this bank as tailwinds. But the entire banking sector, if we see in terms of returns, just from returns point of view, has been underperforming, which gives me a little concern. The NPS could be a little risk because of the COVID situation which is going on. And in terms of valuation, I find it pretty reasonable. But on an overall basis, if we see the banking sector underperforming recently, my opinion would be to stick to the banks which are very strong in fundamentals and which are market leaders instead of getting into small banks like this. So that is what is my view. I would like to know what is your opinion, and this is purely fundamentally given view and in terms of long-term growth. I would love to know your view. Please leave it in the comments below and let us discuss. So thanks for watching. I hope you like the video. Do subscribe to my channel and consider joining. Follow me on Telegram. Thanks for watching and have a great day.